All right, welcome back, everybody. My name is Luke, and this is The Rundown, where we go rapid fire through the stories that you need to know about. We are talking about crypto, the markets, and geopolitics, and where they all converge. So over the last 24 hours, guys, markets were hit with 4 major developments simultaneously. We're talking a dual-track Hantavirus situation, a high-stakes Beijing stomach with Trump and President Xi, a hotter-than-expected inflation print, and a crypto market continuing to hold critical levels despite all of it. Guys, this isn't just one story. It is multiple systems colliding at once. And today's update is pretty straightforward. First, the Hantavirus situation and why the headline is being oversimplified. Second, we're going to be talking about the Beijing summit and why oil markets matter more than politics right now. Third, the inflation data may have ended the rate cut narrative, which is important for crypto. We wanted those rates to cut down. And with the inflation print that just came out, that may not be happening anytime soon. And finally, why Bitcoin holding above 80,000 could be one of the biggest macro signals in the market today. So let's get started here with the Hantavirus situation. We've seen the headlines, right? It is accelerating across the media over the last 24 hours, but there are actually 2 separate situations developing. First, guys, there is now a reported case. I'm sorry, I'm just bringing you the news. But there's a reported case in Illinois. So health officials have confirmed a patient in Winnebago County contracted a North American strain, likely tied to rodent exposure while cleaning a contaminated area. The patient is recovering. There's no widespread exposure identified. And importantly, this variant is not associated with sustained person-to-person transmission. So right now, markets are not treating this as a systemic risk. I mean, I just went out and checked the Moderna chart. I'll pull it up for you, right? If there was a risk, Moderna would be climbing. It's not. That means people aren't quite putting their money into saying that this is going to be some massive outbreak. But the second situation that is getting closer attention, this is from Canada. Okay, so the Canadian officials are continuing to monitor passengers tied to the MV Honduras cruise ship and the Andes strain of the Hantavirus, a strain that has documented person-to-person transmission capability. So several individuals are remaining monitored and in isolation protocols. But to be clear, officials are continuing describing the overall risk is low. From a macro perspective, guys, markets are sensitive to any potential disruption layered on top of already fragile supply chains and geopolitical instability. I mean, the war, the Iran stuff, it's still going on. Oil prices still elevated, right? Every little time, anything could set this market off. But for now, it doesn't appear that it's going to be the Hantavirus. So especially with the energy markets, right? They're under pressure. And under pressure, I mean going through the roof. And that pressure brings us directly to Beijing. Okay, we are talking about President Trump flying over to Beijing over the last 24 hours for discussions with President Xi Jinping. And now, guys, some people think that this is an emergency meeting and then Trump is going over there to discuss Iran because things aren't going correctly. However, this meeting has been on the books since last fall. Okay, so the biggest issue right now isn't diplomacy. It is the energy markets. And remember, this meeting's been on the books. Okay, so it's not some emergency, let's try and end this thing in Iran. It's been scheduled, and this is just one thing they're going to talk about. Because we've seen the oil prices elevated above $100 a barrel. And there's continued instability in Iran in the Strait of Hormuz. This morning's CPI print showed exactly why that mattered. Inflation, it came in hotter than expected. I think it was like 3.7%, 3.8% annually, right? Highest level in years. And that effectively changes the interest rate conversation like we talked about. Markets have spent months expecting Federal Reserve rate cuts. And now, traders are rapidly repricing in that assumption. Some analysts are now discussing the possibility that cuts may remain delayed well into 2027 if energy-driven inflation continues spreading into the broader pricing. So we need this conflict to come down. We need at least get the war premium out of the oil market, right? That's like could be $10 to $15 a barrel of uncertainty priced into oil. Come to a deal with Iran, that comes out, prices will stabilize. And guys, consumers are beginning to feel it directly. I know I am. I mean, I drive a minivan, right? I drive a minivan. And when I used to fill that sucker up, it was 35 bucks. It cost me 60 bucks yesterday to fill up my van. To say that, I mean, the price almost doubled. right? We were at 2 something a gallon. Now we're well over 4 out here. Okay, real wages are starting to fall behind inflation again. Mortgage rates are staying elevated. Financing costs are tightening across the economy. So this is no longer becoming just a Fed story. It's becoming a purchasing power story. If I spend an extra $30 every time I fill up my van, and I drive a lot, that's hundreds of dollars a month that I could be spending elsewhere. And that's where crypto becomes important, guys. Because over the last 24 hours, digital assets reacted very differently than many expected. So despite all the macro pressure over the last 24 hours, Bitcoin continued holding above the critical $80,000 level. And that resilience matters. Because in previous cycles, rising inflation, geopolitical instability, and energy shocks typically triggered broad crypto liquidation. I mean, we'd see it, guys. Anybody would sneeze and crypto would sell off hard. However, it's becoming more mature, and we're seeing something a little more nuanced. Bitcoin dominance continues climbing as capital rotates away from speculative altcoins and toward perceived quality inside digital markets. Bitcoin and Ethereum are the blue chips of the crypto space. And this is a meaningful behavioral shift. Bitcoin is increasingly being treated less like a pure speculative asset and more like a liquidity and purchasing power hedge during instability. I mean, guys, we've even seen the big boys, right? They are now able to use Bitcoin as collateral. When you put something up as collateral, the person lending you the money believes that whatever you're using as the collateral has real value, enough to give you a loan against it. But this guy's the standout, right? I talked about Bitcoin, talked about Ethereum. The standout move over the last 24 hours was XRP. So while Bitcoin and Ethereum traded relatively flat, Bitcoin hovered around 80,000, Ethereum hovered around 2,300, XRP was able to push through that $1.45 level on strong volume. And this move likely reflects several converging themes. Momentum around the Clarity Act in Washington, continued institutional expansion into tokenized finance, and growing infrastructure development tied to ISO 20022 compatible systems. JP Morgan continues expanding tokenized money market infrastructures. Settlement rails continue moving on-chain, and institutional capital continues building underneath the market volatility. That's the key distinction here. The speculation narrative may fluctuate. The infrastructure build-out continues regardless. And when you zoom out, guys, all of these developments start connecting. Because over the last 24 hours, markets have received potential health uncertainty, geopolitical energy risk, persistent inflation data, and continued institutional expansion into digital infrastructure. And guys, even with all this stuff going on, like Hantavirus, geopolitics, inflation, the markets are still at all-time highs. And individually, guys, those are the headlines, but together they form a larger macro picture. The traditional 60-40 portfolio environment continues facing pressure from elevated rates and sticky inflation. We've seen people with the 60-40 split wondering why it's not working. This type of environment, guys, the bonds aren't producing. Okay? It's not working. And we've seen digital asset infrastructure continued expanding into custody systems, tokenized treasuries, cross-border settlement rails, institutional liquidity frameworks. This is happening during a period of uncertainty, not after stability returns. And that may be the most important signal of all, because historically, large financial transitions are built quietly while the broader market focuses on the volatility. So guys, in closing here, heading into the next 24 to 48 hours, watch the Beijing headlines, watch oil, watch Canadian health monitoring updates. But most importantly, watch how capital behaves under pressure. Because while these headlines remain chaotic, the underlying financial infrastructure continues moving in one direction. This, guys, is signal scanning, not opinion television. We are taking the headlines and breaking down what they actually mean so we have actionable intel we can use to make smart, disciplined investing choices. So again, guys, stay disciplined, watch the data, not the drama, and I'll see you in the next one.